Wednesday, November 8th, market analysis. Stan Ehrlich, good morning. We are a little bit 7 minutes after 10 o'clock California time, slightly after the middle of the day. You guys know I start out with the indexes and I go to the futures markets. And sometimes I cover cycles or forex or crypto or a variety of other things. But today we'll probably just stick with the indexes and the futures. As you know, I have been looking for a rally high because we had 7 days in a row of higher closes after the October lows, which this year came on October 27th in the support areas, in oversold conditions, and bounced right back up again very nicely. Unfortunately, last year we got a great bullish engulfing green buy signal, and this year we simply had the oversold condition in support and a turnaround in the month of October, which is when we were expecting it. So here we are on the E-mini December futures contract. We had a higher high today than yesterday, and we are now lower on the day by a modest amount. Nothing special, but if we get below yesterday's lows, we will have an outside down day or a bearish engulfing, and that is typically speaking a little bit of a sell signal. I'm not going to get the color to turn red as we did on the top of the market on July 7th of this year, because we did not quite get to overbought conditions. We came ever so close. The RSI actually got up to a relatively high 73.50. I wanted 75 or higher, just missed at the moment, but I still think the correction is coming. And maybe a 50%. I'm looking for at the lowest level for the December E-mini 42.44 on the downside here in the next week, 10 days, something like that. On the higher side, it may not come down that much. We may only see a little bit of a dip back to 43.30 or so. I can't really tell at the moment. Next chart is the spider. Now here we have 3 gaps to close because the spider isn't open anywhere near as long as the futures contracts. I'm fully expecting this downside correction to get down to 430, 431 to be more exact. And that's the highest of the 3 gaps below the market. So I think that's going to get closed very soon, probably this week. I wouldn't be surprised if it was today. Now, the one I think that's going to be much more interesting is the one that's going to get closed at 423.5. And that one represents a very interesting potential buying price level. Again, it should only take 5, 7, 8, 9 days, something like a week or 2 at the most. And we'll see what happens. But we are in resistance. We almost got overbought. We're at previous highs, which is in effect a resistance. And it's the first time now, the 8th day after it turned around, and the first time we seem to have a good chance of closing lower. 7 days in a row, the S&P and the indexes in general went straight up. Next chart. Spider 1 minute. We came down just a little while ago, around an hour ago, and made the low of the day. Now we've come back up a little bit. I'm thinking it's going to turn around and start to make new lows again. QQQ is officially overbought for my custom RSI index. And we have a higher high today, just a slight bit higher, which means if we get lower than yesterday's lows, we will have a bearish engulfing ER sell signal. So I like the way this looks from the standpoint of a short-term top. And again, the middle gap here, I'm thinking we're going to come down to 357.5, and around that area, maybe even a little bit lower, 352 1/3. turn back up again and start to rally a lot. Next, NASDAQ futures, same story, almost overbought, not quite, damn close. But the amount, percentage, downside retracement, about the same, no real changes there. So I'm looking for something around 14,700-ish and maybe even down to 14,600 at the most. Next chart, DIA, gaps, 2 of them. The first one is not very far away. The one that's the closest here would be closed at 338.5. And here we are at 40.40. So not very far away at all. The one below it looks a lot more likely to be a very interesting price level for a turnaround to go back up again. And it could even dribble off a little bit more than that. But somewhere in this, I don't know, 40 to 60% percentage retracement area and gap closures, looking for a turn back up. Next chart, Russell 2000 made minor new lows for 3 years in oversold condition on the October low, October 27th it was, and went skyrocketing just like the other indexes straight up. Not quite as many days, but left a couple of gaps behind, one of which is already closed today. Now, I'm thinking it's going to come down to close the second and the lowest gap of 165.70 and then turn up. Let's look at the October low chart real quick. I was looking for the middle of October to come down to 406 to 407.5. We ended up bottoming out dramatically on October 26th. So I was off by a week and a half or so. And the low was 409.21. Pretty sure that's the exact low. Yep. So I only missed by about a point and a fraction as far as the price level is concerned. My timing was off, but it still was in October. You know, it's only missed 3 times in 31 years, bottoming out in October. Okay, futures. We have the E-mini, a little bit different perspective, bottoming out in support, coming back up to resistance, and looks like it's in the process of turning around and coming back for that retracement. And depending upon how it does it in the next several days, I may be talking about something very predictable, very common, and very, very usable. My favorite technical pattern, head and shoulders. Again, I know we've had a lot of them in the last year or so. Next chart is NASDAQ, essentially the same story. Today's high is like yesterday's high, and it's almost exactly the same as the last rally high on October 12th. So here again, even though we went through the bear trend line a little bit, we're super close to being overbought and almost a bearish engulfing, but we'll see by the end of the day. So tomorrow we'll know if it was or wasn't. Next chart, bond futures. Again, new highs. We're not coming down like I kind of expected to this circle, so I'm going to erase this now. It's gonna, I was thinking there might be a last shoulder low, but it was a very minor 1-day retracement after being overbought. And now it's going through a little bit of a trend line across the tops. I don't think this line is now all that significant, so I'm actually going to delete it. What's really great is the ER signal picked us the bottom of the market on October 23rd, turned green. We are long from approximately 108.30 and 108.24, 30 seconds. So ER3 kicks in when the little dots are hit, green or red, red sell signal, green SPY signal. And if it's green, we're long the day of the green. And that means we've got both trades going, ER1 and ER3, looking great. New high close, potentially fantastic. Next chart. 10-year notes are right behind it. This looks like a possible new high close. And by the end of the day, it just might even make a new high. But we got the bottom of the market almost exactly to the day. Bonds were to the exact day, but 10-year notes are off just slightly. But the point is, we're getting these signals at major turning points very, very often. That's the important part. So how high is up? Well, I'm still thinking 110, 11 is the first major objective. And then we'll see how much of a downside correction we're going to get after that. I'm liking this from the standpoint of a long-term, excuse me, buying situation. And that's what I've been saying for weeks and weeks now. This market bottoming out on a long-term basis. Next, crude oil. Well, we're oversold. Dropped below this support area yesterday. Kaboom. We kept on going today, no surprise. But now we're oversold. And we're coming very close to another support area. So I'm expecting there's a little bit more downside movement here. Maybe, probably, into the red zone, which starts at about 73 and a quarter, coming all the way down to about 66.90. So somewhere in there, I think it's going to turn around and rally back up again. And hopefully we'll get a bullish engulfing ER buy signal that would be green. Can't find any real quick here on this chart, but we did get the top of the market on that high. Fantastic. An excellent buy signal on that particular day. We've seen better. Next, natural gas. Sell signal at the high. Dropped like a rock. Got stopped out. Took a great profitable trade. Now it's dropping off sharply again, but we're at the bottom of a support area right now. We're not quite, and we're super, super close to oversold. Matter of fact, the low of 26.40 didn't quite get to 25. I love 25 and under for oversold. So you are about as close as you can get. You're in a support area, and we left a gap behind 3 days ago. I think we're about ready to rally back up again and close that gap. And it would be closed if we get back up to about 3.453 or so. No sign it's turning around yet, but these are the conditions under which I think that's very likely. Next chart. Heating oil. And I'll remove that little marker. Okay. So I talked about a head and shoulder top in this pattern weeks ago developing. This is the first shoulder high, in my opinion, August 10th. The next shoulder high, August 25th, double shoulder. Top is always the head of the formation, September 14th, and a little bit larger sideways, and then boom, down to the neckline, which is drawn across the lowest lows, back up to get your first out of 2 shoulders. And I said so at the time, early October. We dropped down, could have been a little bit more, but that's okay. And there it is. There's the rally, almost exactly at the same price as the first shoulder high. Now we got the last shoulder a couple of days, 3 or 4 days ago. Great. The timing is pretty darn good too, because you're symmetrically, you're supposed to be approximately or sometimes exactly the same distance from the first shoulder to the head or the middle of the head, and then from the head to the right, the last shoulder. And that's what we got. You don't even have to count them. You can eyeball it, and you can see that that area right in here is about in the middle. So it's great. Now, this neckline provides us with a measurement that I'm going to make right now, and that is between from the highest high of the formation to the neckline is a trend line, and I'll kill the extension. This is called the depth of the formation, and I'll just measure it downward to approximately 2.13. is my minimum downside objective. It's not going to be tomorrow. It's going to take a month or two. Bear moves come faster than bull markets. So you expect a bear move of a certain amount to happen quicker than the bull market, same amount up. So that's it. I got my downside objective. I think this is working great. I probably will create some arch marks and embellish this formation a little bit more for you tomorrow. But hey, it's working. Told you in advance. Next chart, gold. We're out of the long trade. We bought the day it bottomed out with an ER1. We never did get into an ER3. It never came down to our little green dots. So we had a fantastic trade and we're out of it. So I think the downside correction here is probably going to be down into the ballpark of 1,900, 912, 920, something in that ballpark area down into here in the next week or so. But a longer term bull market may very well have started. We did have a good sell signal at this point, but we don't get out of a long position because we got a sell signal. We get out of a position, long or short, because we get stopped out. Even though in the interim, there could have been another signal in the opposite direction. I don't see anything wrong with taking the brand new signal if you weren't already long or short, and we were already long. Next chart, silver. Sell signal during the topping formation, so not the way I like them. Like that one is fantastic. That buy signal is fantastic, 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 fantastic. Next chart. Oh, okay. I'm looking for a move down probably to 20.8. Platinum. Whoa, big break today. Coming very close to oversold already. I think there's a chance it could challenge the previous low at 856, 857 area, and that would be very, very soon. But because of the size of this break off of an overbought condition, too bad we didn't get a sell signal like that one, or a buy signal like this one, or this one, or this one. We missed. So you can never catch every move. Platinum about to bottom out, a bit lower, something in the ballpark of probably 860 or a little under very, very soon. Next chart, high-grade copper. Yep, overbought conditions stop the rally in a broad, sloppy resistance area. And I think we're going to be challenging the 3.5 area and probably making new lows. We did get this top to the exact day. We got that bottom to the exact day. There have been some really good signals in copper also. There's a bottom. Next chart. Soybeans. And I'm off. There we go. What a whopper of a move. Now we have to make an adjustment. Current quote. We're not stopped out. We have higher highs, but for the last 3 days, including today, yesterday and the day before, for the 3 days, we're overbought. And look how close we came to a resistance line that I've had here for a long time. I'm going to squish the data so you can see here how big of a huge sideways trading range this thing has developed ever since approximately February of last year. That's approaching 2 full years. Less what? 4 months, 3-4 months. So overbought conditions. Looks like we're about to take a profit. I think it may start to slip back down into the blue zone again. We'll see what happens next. We're short from the top on soybean oil. What a great short trade. The minimum downside objective on this head and shoulder top formation. Did I? Yeah, I did. There's the double top, like silver actually. We got a sell signal on the second high. We're short right there, ER1. ER3 unfortunately missed by a hair. Down we go, down we go. What was the date on that? We were short from August 21, and we still are short. Trailing stop is moved by a variety of factors, not a percentage behind the current quote, not a dollar amount behind the current quote. It's adjusted for a variety of technical reasons. That's doing great. So we got to our objective of 50, and these are minimum objectives. As I always say, I think it can go down even more. Close to being oversold, but not quite. Next chart. It's a whopper. We're overbought, but we have cleared resistance. This is now well above, and so far staying above, even the low of the day, a support area. If it closes above support, even though it's overbought, it may twiddle around here a little bit for a few days to eliminate the overbought condition and then start to move higher again. But you've got major tops here to deal with at 476 and fraction. That could be challenged. I'm not sure whether this is really topping out or not. It looks like it could move up some more. That's meal, corn, buy signal in corn. Still good. We missed getting stopped out by 2 ticks. The yellow is our stop. Hasn't moved yet. It's been 3 days. Our green dots are our ER3. We're long with a small loss at the moment. And our ER1 trade also has a minor small loss also. So all I need is to go back up toward today's high, and of course higher, to turn both ER1 and ER3 profitable. And it looks like it may do it. Next chart. Wheat. A little bit more of a rally is going to bang against some major resistance, and then I think it's going to turn flat to sideways, flat to lower. I'm still long-term bearish on wheat, as I really am in corn. Even though we got a buy signal, I'm not really, frankly, expecting a lot out of this. Got a lot of resistance above the market in corn. Back to wheat, and next one is live cattle. Oversold. If we get above yesterday's high, which doesn't look quite likely, we'll have a whopping great buy signal, but it hasn't done it yet. That will change the bar to the tick, real time, green. And we will be getting long at that tick, but it hasn't happened. And it looks like it may not. So turning neutral to friendly in cattle because of the oversold condition and sort of a possible double bottom, not too accurately, but some divergence here. New lows in price, but no new low in the indicator. Yeah, it adds a little more bullishness to it. We caught the top of the market to the day back in September, and we caught this really nice sell signal also back in July 20th. Next chart. No signal here, except we got stopped out finally of our long Miss Piggy, long live hog. ER1 got long with the green. ER3 we missed all the way up and got banged out of the trade today. Nice. Probably going to slip back down to the support area, 69.8, and that would be maybe all the way to 68 flat. So looking for a little bit more of a downside move here for the moment. Longer term, clearly the bear trend is dominant, and we might still move all the way down to 53-ish. Next, OJ. We had a whopper of a sell signal on October 31st that I still claim could be the high of orange juice for very long, many months to come. Now the system, which is changeable if you want to slow the stop down or speed it up to take a profit quicker, but you should leave the automation, whatever settings you like to use, alone. That's why you develop automated trading systems, whether it be AI generated or not. We're out. Great trade. Probably going to rally a little bit more. I'm thinking back up to the old bull trend line. And about the best I can do. I really can't come up with a great one in this particular case, except, pardon my cough, we do have a gap to close. I forgot to put a marker here. Let's do that right now. Okay, and right here is the gap closure. Boink. So it tried to do it, failed, and now here's your second chance. And that looks like a good spot for it to stop rallying and turn back down again. 374 1/3. Next chart. Cocoa, overbought. Looks like it's topping out. Came back to support already and bounced off of it to new high ground. I'm going to wait for any other commentary, but it looks like it should have more of a downside pullback. Trend is still up. Coffee, recent trend is still up. Longer term, a little on the iffy side. Your lows are starting to be higher, but the highs are still a little lower for a little bit less time period. I like what I see. Still friendly, cleared resistance again and again last few days. Headed probably up to approximately 178, which is not much further, and maybe even up into the 190 area. And sugar, having a little trouble getting a good handle on sugar. I did mention the bearish engulfing yesterday and the likelihood of it slipping off some, which it's doing today. No surprise. But where are we going to come down to? Okay, about 26.50. After that, I got to take a closer look. Next, cotton the rag, support area did not hold. Closed a little bit below it yesterday in oversold conditions, but the oversold condition is getting more and very oversold, down to now below 15, which is way oversold. Last time we had this oversold condition was way back here in June. Look at that rally. And we got a good sell signal at the top. So I'm thinking we're pretty close to a rally here, but it might get a little bit lower. It might get down to 73.60. And to be honest with you, there's a very, very old gap to try to finish closing. And that would be the 71.75. And there is the gap right over here, a year, literally a year ago. Interesting. And that's it. Spider hanging in there pretty good. Right now, only down 40 cents, nothing to speak of. We might have 8 days in a row closing higher if we can squeak out a little more strength here. But that's not my opinion. It's that we have started a minor downside correction for a week or, week and a half. You guys have a great day. Profitable trading to you. Bye.